I think that January of 2024 was the beginning of the period of corporate adoption of Bitcoin. And, that first big catalyst was the SEC's approval of spot ETFs for Bitcoin. The second big catalyst is going to be the SEC's denial of every other crypto application for a spot ETF. And the entire world was thinking, will the regulators ban Bitcoin?
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses Bitcoin and crypto. He believes that the period of business acceptance of Bitcoin began in January 2024, and you be aware that the first significant catalyst was Bitcoin, or the SEC's approved spot ETFs. The refusal of all other cryptocurrency applications by the SEC for spot ETF will be the second major catalyst, and everyone was wondering if the regulators would outlaw Bitcoin, and we responded that it won't be prohibited. The next concern was about whether it would be copied, and when we saw the regulators actually reject the applications for copies of other cryptocurrency assets, that is when the objection moved on. We will have selected the option that states that it won't be copied or banned. And often, when people are in, if you're debating whether to construct a 100-story skyscraper and shell out hundreds of millions of dollars for someone who advises using either bronze or steel, when you ask, well, which one is the right one? The answer isn't apparent. It may be that steel is the right one in cases where steel fails, or it could be that bronze is the right one in cases where steel collapses and paralyzes a significant corporate endeavor. And lots of things Michael Saylor discusses, so please watch the video to end, and share this video, and subscribe our channel, Everyday Finance. Thanks.
Reason. Bitcoin represents the world's first, greatest digital settlement network, digital monetary network, digital trust network. And we're going to have a session I'll have with David Marcus, and he'll be speaking about wiring dozens of companies into the Lightning Network for speedy, extremely cheap settlements. So if you're a company and you want to be able to move money at the speed of light, or if you want to implement the next generation of internet applications by using the Internet of Money, then you're going to be interested in this. It's like we're in the first year of corporate adoption of the Internet of Money. And just like in 1994, that was the first year of adoption of the internet. You would want to do it if you want to stay on the leading edge of digital transformation. The second reason the company want to do it is because the entire world is attempting to beat the cost of capital, and the cost of capital is about 12%. And the capital asset that most of them use is bonds. And bonds very rarely yield more than 3%. So all of their treasury portfolios are invested in something which is generating a minus 9%, a negative real yield. And Bitcoin generates a positive real yield. In the last 4 years, it's been 40 to 50%. So it's 4 times the cost of capital. But 2 times the cost of capital would be magical. And even equal to the cost of capital, if you could simply invest your capital at 12% and meet 12%, then your capital wouldn't be dilutive to your shareholders. So Bitcoin represents an opportunity on the P&L for technology leadership, and it represents an opportunity on the balance sheet to attract capital, preserve capital, and create shareholder value. Yeah, I think that January of 2024 was the beginning of the period of corporate adoption of Bitcoin. And, that first big catalyst was the SEC's approval of spot ETFs for Bitcoin. The second big catalyst is going to be the SEC's denial of every other crypto application for a spot ETF. And the entire world was thinking, will the regulators ban Bitcoin? And we answered the question, no, it won't be banned. And then the next objection is, but will it be copied? And when we actually see the regulators deny the applications of the copies of other crypto assets, then we will have checked the box. It won't be banned, it won't be copied. And generally, when people are, if you're deciding whether to build a 100-story skyscraper and invest hundreds of millions of dollars on it, and someone says, well, you either need to use steel or you need to use bronze. And you say, well, which one is the right one? And the answer is unclear. Well, it might be that the bronze is the right one and steel collapses, or it might be steel is the right one and bronze collapses. That paralyzes a big corporate project. But when you get past that and you realize, well, there's just steel, and there is no second best metal for structural civil engineering. Once you get to that point, the project moves forward because it's pretty obvious to the corporation they want the 100-story building. They just don't want to be paralyzed by the indecision and the fear of making the wrong choice. So I think that the critical catalyst will be not just the institutional or the regulatory acceptance of Bitcoin as an institutional asset, but it'll also be the regulatory rejection of the alternatives.
For the first time, Grayscale Investments has had net positive inflows for the Grayscale Bitcoin Trust. Bitcoin, this is the result of over 4 months of non-stop withdrawals following its January 3rd conversion to a Bitcoin exchange-traded fund ETF. Grayscale's Bitcoin saw inflows of $63 million, following outflows of roughly $17.5 billion from the 11th spot. Since its launch on January 11th, the Bitcoin ETF has received $6.9 million in inflows, the highest of any of the other funds reported thus far. Meanwhile, the Fidelity Wise Origin Bitcoin Fund, FBTC, has received $12.6 million, followed by the Bitwise Bitcoin Fund, BTB, with $33.5 million, and the Invesco Galaxy Bitcoin ETF, BTKO, with $33.2 million. The Bitcoin community has been speculating on the effects of the current events on the price of Bitcoin. Pseudonymous crypto investor Dipman explained to his 2,800x followers in a May 3rd post that crypto trader Joel predicted to his 880,300x followers that day that Bitcoin's new all-time high is on the horizon. He said that the GBTC was the main source of sell pressure across all spot Bitcoin ETF, but the tides could be turning, which effectively means a significant decrease in sell pressure and additional increase in demand, while ETF collectively are buying more BTC than miners can produce. The housing slump will end with $60 million in inflows into Grayscale ETFs, and six-figure Bitcoin will follow soon after. In response to the news, crypto trader Jordan Lindsay highlighted the price of Bitcoin and said that it is clearly reacting to both inflows and outflows. According to CoinMarketCap data, the price of Bitcoin rose 4.91% in the last day to $2,840 at the time of publication. Several factors have contributed to Grayscale's ongoing withdrawals since the launch of the 11-spot Bitcoin ETF, with one reason being the high fees of GBC relative to other available ETFs. The fees for other ETFs are all less than 1%, however the charge for GTC is fixed at 1.5%. Franklin Templeton presently has the lowest fee at 0.19%. Another major factor is the massive numbers of GBT shares that bankrupt cryptocurrency companies FTX and Genesis are trying to sell off in order to pay off their creditors. On April 6th, Cointelegraph revealed that Genesis sold almost 36 million GBT shares for $2.1 billion, which was used to buy 3241 Bitcoin. Let's get back to Michael Saylor interview.
Yeah, well, I think that if we go back to LightSpark's activities again, they've got dozens and dozens of corporate customers that are regulated compliant entities that want to integrate Lightning in order to provide instant, cheap, final settlement. Each of those companies is operating in a different jurisdiction, perhaps with a different set of regulators, and they may have a different mission, right? The mission of a crypto exchange or a large scale bank would be different than a simple money transmitter, and that might be different than an e-commerce company. So the reason we need corporations to be involved is corporations can afford to hire the array of lawyers, the array of financiers. They can put in place very expensive accounting systems. And those systems, will then have normally built into them all the various compliance rules, perhaps state by state, perhaps nation by nation. The rules for doing banking and money transfer in the UK will be different than France, will be different than California. So I think what you're going to see over the coming 4 years is progressive adoption of Bitcoin by a bunch of banks, a bunch of various regulated entities operating in every major jurisdiction. The rules regarding transfer are going to evolve. In some cases, they're clear. In some cases, they're hazy. In some cases, they're being contested. In some cases, they're very unclear and uncertain. I don't think that in 4 years, every question will be answered, but I do think 4 years from now, you'll have a lot more clarity than you have right now. And that clarity, to a certain degree, will come because of the entrance of the large entities in the space. For example, the success of the Fidelity and the BlackRock ETFs will accelerate clarity with regard to can NASDAQ and or other stock exchanges trade options? Under what when can they trade options? There's already interesting movement afoot for the New York Stock Exchange to start trading 24/7, and that's been created by the crypto enthusiasm. So I think you're going to see an evolution of traditional finance organizations. I think you're going to see a lot of lobbying for more precise legal clarity and regulatory clarity. And you're going to see a lot of building, both by new digital assets companies, as well as you're going to see all the traditional accounting and traditional finance operators. They're going to upgrade their systems in order to support this new Bitcoin-backed economy. And it's going to take a lot of money and a lot of accountants, a lot of lawyers, and a lot of thinking and some time. But because of that action, I think we'll get to a much better place.
On May 3rd, contracts for Bitcoin and other options worth a total of $2.4 billion are scheduled to expire. Could result in a rise in volatility of the market. Call and put options are the two types of Bitcoin options contracts that enable investors to speculate on price movements without actually owning Bitcoin. Call options give investors the right to purchase a cryptocurrency at a specific price before a specific date, while put options allow investors to sell a cryptocurrency at a specific price before the expiration date. Investors sometimes use the put-SL call ratio as a gauge to determine how the market is feeling overall. A negative sign is seen when traders buy more puts than calls, and a bullish sign is seen when they buy more calls than puts. A ratio of less than 0.7 indicates a bullish put to call ratio, whilst a ratio more than 1 is viewed as a bearish signal. A total of 23,367 Bitcoin contracts valued at $1.39 billion are scheduled to expire on May 3rd, according to data from the put-to-call ratio for Bitcoin options contracts is currently 0.5, with a maximum pain point of $61,000, according to the derivative exchange. The price at which the asset will cause the greatest amount of misery is referred to as the financial losses to the largest number of holders, likewise correspond to the expectation that 334,000 contracts will expire on Friday. These expiring contracts have a maximum pain point of $3,000 and a put-to-call ratio of 0.37. Options contract expirations have historically been accompanied by short-term price volatility in the spot cryptocurrency market. In the last few weeks, both Bitcoin and E have seen bearish pressure. The price of BTC dropped below $60,000, signaling an almost 20% weekly correction, after the other price also dropped below $2,900. Within days of expiration, the cryptocurrency market frequently recovers from the volatility of the LED options. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.